presentation brought to you by Tiger FinTech and covering the globe. So good morning, good afternoon, or good evening to you, depending on where you are in the world at the moment. Today, we are going to take you to the sidelines of the Berkshire Hathaway shareholder meeting in Omaha, Nebraska, in the United States of America. And we'll be going to Omaha, crossing live to our correspondent on the ground there. And Pauline Teo will be keeping us informed and letting us know what's been going on over the course of the day. Now, in Omaha, it's now late in the evening, so we're very grateful to Pauline. I know she's been up since very early this morning because the shareholder meeting in Omaha is a very special event. Now, it's held annually, as the name suggests, but it has not been held for 2 years because of COVID restrictions. So this is the first time in 3 years that the shareholders of Berkshire Hathaway have made the trek to Omaha. And this meeting itself has taken on incredible status because of the success that Berkshire Hathaway has had in investment markets over many, many years. And indeed, Berkshire Hathaway and its CEO and chairman, Mr. Warren Buffett, are considered amongst the best investors in the world over the long term. So this is a very important meeting. And as I say, we'll be going live to the sidelines of that meeting to get Pauline's impressions. A couple of things before we get started. Today's presentation will take about 45 minutes, and then there'll be about 15 minutes for questions. If you think of anything on the way, please feel free to type those questions in. And when we get to the end of the presentation, we'll answer as many of those questions as we can. It's also very important to note that today's presentation does not contain investment advice. As investors, we all come to the markets with different amounts of capital, different goals, different time frames, different risk appetites, and all of these factors and more mean that the right decision in any given situation depends very much on the investor's circumstances as much as the market. So the decision about whether or not any of the information presented today is useful in your investment scenario is a decision entirely for you. And it's up to you to decide what, if any, information presented today will be useful to you in your approach to investment and financial markets. So with those important facts under our belts, let's for a moment go to our introduction. My name is Michael McCarthy. I'm the Chief Strategy Officer with Tiger Brokers Australia. We're part of the Tiger FinTech group. And today I'll be your host because what we're looking to do is get the insights and the information that Pauline Teo, our guest, has been able to pick up from the sidelines of the meeting. So I'd like to introduce Pauline. Pauline works with 8V, beg your pardon. They are FinTech education a group based in Singapore, and Pauline's one of their top specialists. It's particularly important because 8V have a very similar investment philosophy to Warren Buffett's Berkshire Hathaway group. So Pauline is very well placed not only to help us understand what Berkshire Hathaway have said today, but also to give us more background around the potential that comes with this investment approach. So I'd like to introduce Pauline to you, and also start by asking Pauline, what's the impression you're getting on the ground there in Omaha?
Hi, Michael. Hi, everyone. This is Pauline. Yes, bringing to you all the way from Omaha, and I just attended a really long AGM, started to queue as early as 3 a.m. in the morning, and it happens that the morning Omaha was actually having a light drizzle. So in the cold of 15 degrees Celsius, cold wind, this is the first time I really have seen the AGM, because I've been to quite a number of AGMs in different countries. Yeah, because as investors ourselves, as value investors, we believe in investing into right businesses. And one of the best ways to really understand in terms of businesses is to attend AGMs. And of course, this is really the AGM that everybody's looking forward to, because we really have very good nuggets, which later on I will share more with you. But the impression that I've got is really, I think what Warren Buffett has done, because I've spoken while queuing to go into the AGM, we have a chance to interact. And when I interacted with the different value investors who were waiting to attend the AGM, as young as 22, 23 years old, they start to do investing. Yes, and I've seen young people still practicing value investing. I've known of people from Austria, from different parts of US, starting to really be having influence by a Warren Buffett to start to do value investing. And they have really good results, especially for the past years that Berkshire has done really well as a value stock. And I've also spoken to one of the value investors. He's 78 young. Yes, 78 years old young. And he still say he's really young, because if Buffett at 92 years old is still eating candy, and the whole of the 6 hour of the AGM, what I've been saying was Charlie Munger was there with this, really literally munching this peanut brittle all the way. He's 98 years old. And both of them are really so, I think, enthusiastic and believing, having the conviction in this investing and in what they do. All right. And they really, when it comes to investing, they not only are able to understand all the businesses that they are in very well, but they are able to educate. I think that education to the shareholders is really important. So much so that shareholders, and the 78-year-old gentleman, he was saying he knows what he's buying. He knows the management is taking care of his money. He knows if he were to put his retirement funds into Berkshire, he also bought for his children, his grandchildren, his whole family. This money is in safe hands in the management who believes in managing their money with integrity. So this is the whole impression that I've gotten, which I've not seen in probably other AGMs, because in other AGMs, I believe many of the shareholders were there, was just thinking, okay, guys, are you giving dividends? What are you going to give me next year in terms of my returns? But I think what Warren Buffett and Charlie Munger has done very well when I've spoken to many of the value investors, including me, is over the years, not only have they run the company very well, but they have educated us very well as value investors, so much so that we know when we stick by this company, we know what we are getting into. I think that's the very beautiful part of it. Yes.
Excellent. Excellent. And Pauline, you've touched on the attendees at the meeting, and I gather there's a very wide spread of ages. Is it also, I know that you've traveled a long way to get to this meeting, coming from Singapore to go all the way to Omaha in the US. Are there many other investors who've made a similar journey, or is it more local US-based investors at the meeting today?
Really, I've seen people from Germany, India, of course, US itself, coming from different states. Toronto, we do have, I've seen a group, which I'm in that group as well. They put me in 50 over people, and they form a group, 50 over people, all the way to this AGM, coming as a form of a pilgrimage. Yeah, and it seems like they come every year. And many of us, we and the value investors, every year they attend the AGM, and they were looking forward to this because past 2 years, I was supposed to come in 2020. So many of us, we shared the experience that we have to cancel everything, our air tickets, due to the COVID. Yeah, so this time around, we were really looking forward to come over here. And especially so after, I would say, I treat it as like the very first AGM, like many of us attend. Why? Because it's like a post-COVID. It seems like the world had changed after the COVID. And now everybody puts the world to be a pre-COVID, during a COVID, and in that COVID, there is like a void that nothing has happened. And now we all start our life all over again, like a post-COVID. So it seems like a reborn and a newborn of us coming to a really good gathering of all the value investors this time around. Yeah, really different countries, age group, we all come over here to share the same experience of investing.
And how did the crowd react to today's meeting?
Sorry again?
How did the crowd react to today's meeting? Were they generally on board with?
Yes, they are. Would you like, I can show you a share screen of this video. I think the video would say 1,000 words. Yeah, maybe just let me show you this video that at the start, and you can see, and later I'll show you the picture, how many people, how the crowd is like. Okay, maybe this is a little bit too fast, but I'm just going to show you this picture that shows that how everyone is really participating in the this AGM. And this is the first time I've seen people being so enthusiastic about it. Okay, just give me a minute. I look for the share screen. Okay, it's over here. Let me do a stop share and yeah. Yes, this is the picture you should see over here. Can you see the picture?
Not coming through to me, Pauline.
It's not coming through to you? Okay,
no.
Let me do one more time. How about this? Is it showing?
No, it's not coming up.
You want sharing to stop share over at your end? You click stop share and I'll do it. You stop your share. Were you able to watch the video just now?
No, I didn't see it.
Oh, you didn't watch the video. Okay. So you might want to do a stop share and I will share my screen again. Yeah.
I'm trying to actually.
Couldn't find the button?
My controls have disappeared.
Oh, okay. Okay. It might be on top.
Here we go. Okay.
So, yes. Now. So probably now you would be able to see this. Are you able to see the picture?
Yes.
Yes. So you can see that the crowd and it's really in this auditorium. It's like a concert, and you can watch this video at the start. Okay, are you able to see the video screen?
No, it's disappeared again on me, Pauline. Maybe you...
Okay, disappeared on you. All right, so let me do in a share screen on the video. Are you able to see it right now?
It's coming in and then dropping out straight away. You might have some bandwidth issues given that you're at the hotel there.
Okay, it's all right. So I'll just show pictures then rather than a video.
Yeah, that might be the way to go. All right, terrific. So sorry, please go on.
Yeah, that is how enthusiastic people are. And as I mentioned, this is the biggest AGM. And not only that, the thing that I find Warren Buffett has done really well, or Berkshire has done really well is, which I didn't have the time to really capture the photo, is they put all the invested companies into an exhibition hall. And I think that's one of the best marketing method. You see, this apparel is actually by one of their invested companies, which is Brooks. Not sure whether you have heard of or seen use their shoes, their running shoes. The Cis Candy is there. Okay, the Geico is there. So what is the best way to really do marketing? Is really to put all your invested companies into the exhibition hall. Everybody's there for the whole day. During lunchtime, the break times, we will just go over, and we have an idea from as a consumer, as a shareholder. And when I was buying like the Cis Candy, the employees would say, "Hi, great to see you. You know what? You are buying this, and as one of the shareholder, and So it treats it like a business." Yeah, and they are a shareholder in Berkshire as well. So they treat it, this is my business, and when I'm buying it, this is my business, and they call it like a business owner. So it makes it like I'm not a consumer at all. I'm actually patronizing my own business.
Right.
How good is that, right? Are you going to go over there and say, "Wow, this is expensive"? No, you can't say that because I'm a business owner.
It's very clever.
It's very clever. It's intelligent, right? Yeah.
All the interests are aligned. Excellent.
Yes.
Excellent. All right. Well, that's terrific. Thank you for those insights, Pauline. Clearly, we'll be looking for more from you today. And this is the running order of events today. We've introduced Pauline, but we're going to talk a little soon about the idea of value investment. And then we'll move on to the meeting itself. And Pauline has been through a marathon today because as part of today's presentations, as well as getting to meet the investment companies that Berkshire has invested in, there were 2 3-hour question and answer sessions with Mr. Warren Buffett and Mr. Charlie Munger, who's the Chief Investment Officer. And so we'll be asking Pauline to share the insights that she gained in attending those sessions. But before we do that, we're just going to look at the idea of value investing. And it's important to talk about this. As individual investors, we sometimes don't think about the investment styles that we use, but professional investors clearly do. In fact, most of them work to mandates, which specifically spell out their approach to markets, their investment philosophy. And there are many different approaches to the markets, as many of you know already. Some use exclusively technical analysis and take a purely technical approach on the world, but others look at different aspects of the markets. Now, one of the most popular styles of investment over the last decade or so has been momentum investing, that is identifying businesses that have growth in their earnings and growth in their share price and getting on board with that momentum. That's been a very successful style. In contrast to that, which is often a top-down approach, that is looking at the market from the top down and looking for those stocks that pop up because of their share price action, value investing tends to take a completely different approach. Value investing starts with the companies themselves. Now, it should be pointed out that value investing is a very broad term, and it means different things to different people. Not everybody agrees on what value investment is, but what most value investors have in common is their bottom-up approach. That is, they start with the companies themselves. Now, Berkshire Hathaway are, if not the most, they're certainly one of the most successful value investors in the world. So, Pauline, I know that this is your space. You're a value investor yourself. Could you tell us a little bit more about the Berkshire Hathaway philosophy? And also, one of the problems for value investors over the last decade or so has been that not all stocks that have looked like value have responded. And yet Berkshire Hathaway have maintained their position at the top of the performance tree. So could you give us some insights what it is that they're doing, first of all, in terms of value investment, but secondly, what it is that they're getting right that other value investors might not be getting right?
Yeah, I think that the most important fundamental in terms of value investing philosophy is to not focus too much on the share price, but looking at a stock in terms of a business. I think this is what Warren Buffett, Charlie Munger, and value investors should be doing. But it's easier said than done, right? Because every day we are just focusing on share prices because the share prices is right in the face. So Warren always like to use examples like, for example, if you buy a farm, right? What are you going to focus on? Are you going to focus on every day somebody is going to come to your farm and offer you a price? Right? To say today how much I'm going to buy from you, the next day another person is going to come and offer you another price. No, when we buy a farm, what are we focusing on? We're focusing on how the farm can add value. What are we going to grow? How do we fertilize it? How do we make sure that the value, that we create the value of this particular land so that, you know, when it can grow into fruits, into a crop, and we can sell it. Now we can collect dividends, we can collect returns, there's the ROI. So once we focus on this farm, we focus on the fruits of the labor, what would happen is, if this is such a fertile land and we can get so much of a returns from it, you know what? Someone would see that this is really good and eventually may offer you a price to pay. But that should not be the focus. However, you know, in buying stocks, a lot of people forgot the very fundamental that when we buy into a stock, we are supposed to be buying into a business. So the key thing that Warren Buffett always advocates is this: a moat. Make sure the company has a moat. Buy the company that adds value. And today he focused a lot on this thing about value creation. So when he talks about Berkshire, he also says this: when I'm here, I focus on this thing about how do I create value for my shareholders. This is what he has been thinking every day, rather than to think about the share price and so on. In fact, if he also mentioned he has about 80, I think up to today, about 80 over companies that he has invested in his portfolio right now, which means there are 80 over Berkshire managers. The managers are actually the CEOs of the different companies. And he every time built a lot of trust into these companies. I mean, into the CEOs, because these CEOs, they are really important people. They grow the company. And I heard from Jim Weber, who is the CEO of Brooks. And he said, Warren Buffett gave so much trust to him and to the rest of the managers, including I've heard from Borsheim, the jewelry, that they have actually invested, that, they give them so much trust that they just ask a few questions. And they only say a statement. Every time the board meeting is always 5 minutes, he will tell the managers that, you know what, thank you very much for the job well done. Next year, you just need to focus on creating more profits, all right, and build more value for our shareholders. And I thank you for all your hard work. That's the only thing that he said to all the managers. And that's it. Yeah. So that's the kind of trust that many of the managers whom I heard, because I've had interaction with them over the past few days in a value conference, that I think that's the success factor. That as a value investors ourselves, we also need to see when we are investing into a company, which in V College, we also share with our graduates that do not focus just on the price itself, because we won't be able to take it, especially when the market is so volatile. When there's news saying that the Fed is going to increase interest rate, the very next day, you see the share price would drop. But you can see the businesses, they are still doing whatever that they're supposed to do. Like, for example, those who are supposed to drink Coke are drinking Coke. Those who are eating McDonald's continue to drink McDonald's. Those who are drinking Starbucks are still drinking their Starbucks. Nothing has changed with the interest rate going up. So businesses is as per normal. So when we focus on the business, we focus on the longer term, and we should see that over the long run, if we invest in a good fundamentally sound business that creates value to the consumers, naturally when they have a moat, they will be able to sell more. They are able to price higher even though there's going to be inflation, and consumers will continue to buy. Yeah, in fact, today, in the session, Buffett is saying right now the situation would be in the market, there is actually a lot of cash. So he is also concerned about now the US dollars is becoming worthless, right? He's saying he's very careful with the word. He was saying initially he speak too fast to say worthless, but he said no, it's worthless. It's worth lesser than the past. It's not about it being worthless. Yeah.
It's not going to zero.
Yeah, he said initially he didn't notice that. So he said that was the learning experience that he had in the previous interview. Somebody was interviewing him and he was saying, you know what, you have to invest your US dollars. If not, it's going to be worthless. And they were like, what? It's going to be worthless, going to zero? Then he started realizing it's going to worth less. Yeah, I think that's the thing that you want to say. So what we are just saying is, with the inflation, with a high interest rate or whatever, just focus on the business. We put our money work harder for us, and we put into a good business, and this business would generate and create lots of value. And when it creates lots of value, it should, increase the valuation, and the share price, I believe, would just increase accordingly. And that's what he believes as well. Yeah.
Yes, right. And it's been a very powerful philosophy. If I can just bring up this chart of the share price of Berkshire Hathaway, you can see how spectacular the gains have been over the years. And if you were to have invested $1,000 back in 1990.
Sorry, Michael, I can't see the share screen. So you might want to, yeah, I'm not sure whether the participants are able to see it.
Oh,
Yeah.
okay.
Are we able to see their chat? Yes. So
Right. So are you seeing? Okay. No. Let's try that again, shall we?
maybe Zoe can let us know whether she's able to see it or it's only just my side in the chat. Oh, now, yes, now it's coming up. Yeah.
Okay, terrific.
Great.
Okay, so now you can see the chart. And as you can see, the share price rise over the years has been absolutely spectacular. Now, this scale is in US dollars. So you can see that at one stage very recently, Berkshire Hathaway shares were worth more than $500,000 each. And that's an extraordinary gain over the years. And this is the power of the investment approach that Berkshire Hathaway employs writ large. Berkshire Hathaway was originally a cotton milling operation that was taken over by a group of financiers led by Warren Buffett in 1965. And although they shut down the cotton milling operation in 1985, by that time, Berkshire Hathaway had been established as the holding company, what we in Australia might call an investment company for the money managers employed at Berkshire, mainly Mr. Buffett and Mr. Munger. So the impact of their investment approach over the years has been nothing short of spectacular. And in fact, if you invested $1,000 back in 1990, it'd be worth just under $50 million today. So those who've stuck with Berkshire Hathaway over the years have done extraordinarily well. And this is one of the reasons why this meeting has taken on an almost religious aspect. People are big fans, you might even say disciples of Warren Buffett and Charlie Munger, and the devotion they show to them is at least in part explained by the extraordinary success that they've enjoyed over the years. Now, because they're using a different approach, it means that sometimes they will they don't always track the market, is what I'm trying to say. And that means that at times they will outperform the market, as they have done over the longer term. But that also means that at times they will underperform the market. And this is now a close-up chart, just the last few years. The chart in red and green is still the Berkshire Hathaway price, but the blue is the S&P 500 index. And you can see that over 2018 and 19, for the most part, Berkshire Hathaway outperformed the market, the broader market. That then came into line in 2020. And then after the COVID sell-off in early 2020, Berkshire Hathaway actually underperformed the broad market in that rise. Now, both the S&P 500 and Berkshire Hathaway were going higher, but the S&P 500 was actually outperforming for most of 2021. And yet we see what has happened over the last couple of months as the US tech sector in particular has corrected. The impact on Berkshire Hathaway, while it has had an impact, has not been as severe. And that means that they've been outperforming recently. So it's an important thing for investors to consider when looking at Berkshire Hathaway. It will not deliver a market performance. That's deliberate. Over long term, that's a strategy that's really paid off. But it's important for investors to understand that the Berkshire Hathaway philosophy is a long-term approach to the market, not the short term. And that there will be times when they'll do better than the market. There'll be times when they underperform the market. So something to keep in mind if investors are looking at Berkshire Hathaway, that is one of the factors of investment. So that's important. Pauline, I'd now like to turn to the meeting itself. We've got an idea of how Berkshire Hathaway approached the market and how much success they've enjoyed, but what did they actually tell investors today? And perhaps we could start by looking at the bigger picture. I know that inflation is one of the key issues for markets around the world at the moment. Did Mr. Buffett or Mr. Munger have anything to say about the inflation outlook and its impact on markets?
He used this word, which I was just thinking. Yeah, he says inflation swindles almost everybody. Yeah.
Swindles.
Yes. I'm like, okay. He uses this word. But he said, I mean, inflation is not a bad thing. And he said, it is natural that there should be inflation, and especially during this period where the interest rate has been so low, the inflation would naturally have to go up, right? So with this, the only way, all right, that he says, one of the questions that were being asked, like anyone would ask, is what is the one star, Buffett, that you would be looking at right now? And Warren Buffett was saying, well, that's, I think, is always the answer, that everyone is always looking for the best performing stock, which is that one star. But to him, that one star is always this word. And I think it's stating over here, which is invest in yourself. He's just saying the best way to invest, to beat inflation, is us. He used the thing, if you're a very good violinist, just be very good at it. Just be the best that you are in. For example, if you're a doctor, be the best doctor. If you're a lawyer, be the best lawyer. And that would naturally beat inflation. So this is the advice that he gave, all right, to the person who asked the question. But of course, on a side note, and for him himself, the best way for him to beat inflation is definitely to put the money into good use of investing into assets that create value. I think that is the best way of us who knows how to invest, or as investors, because if we want to be investors, we want to be one of the best investors, that is for us to definitely do our homework, okay, read up and know what we are investing. And when we invest within our circle of competence. And this is always what Buffett and Munger always advocate. If we know it, we definitely have the conviction in it. And when we have the conviction in it, time will be our best friend, because when they buy any of the stocks or businesses per se, they are thinking of holding it forever, because they are thinking that this should be a good business. And if I can, I would like to hold it for a long term. But that aside, later on, I'm going to share something that he also at times is an opportunist. I think Michael will know what is that stock that we are talking about. Yes, but we'll share it later. I'll keep it for everyone so that you will listen to it. Something that Buffett is taking this opportunity since January. I think he is actually scooping up this stock, and right now it is still he's doing an arbitrage. And right now, this particular stock, if we were to do it, I think on Monday we still have the chance to do that arbitrage.
All
Yeah,
right.
I'm going to leave it later on, which is that stock.
Well, I look forward to hearing about that, Pauline.
Yes.
That sounds good. And we will drill into the individual stocks that Berkshire Hathaway has at some stage very soon. But before we do that, were there any other? So, for example, are the team at Berkshire Hathaway concerned about rising interest rates at the moment? How do they see the investment world, or do they not care?
Yes, when he talks about in terms of investing, I think Warren, what he focuses on is to make sure that he and Munger have been thinking that right now the world is really crazy. Yeah, why crazy is because like people would just like, for example, going to the stock market without knowing what they are in. Okay, and the best thing is Warren actually quoted to say that they go over to find a people who, the stock market right now is like traders. It's either traders who don't know anything, using the charting, or traders who didn't know anything but relying on the brokers who know even lesser. Yeah. So that's the reason why we can see that there are times that the prices were actually expensive, overvalued, yet people are still buying into it. Yeah, and they were just reacting over news after news, and that's not the way to do it. In fact, Buffett even say right now, people are becoming, he used the word actually being tribal, like in the 1930s, where the public sentiment, people are just, it's very dangerous, okay, because when people say that 2 + 2 is 5 and the other says that 2 + 2 is 3, they are going to just give you all this answer, and you find that it's fun to participate in it. And he mentioned why he and Munger can do so well. It's not because they're especially smart. It's just because they are more sane than other people. That's all. Yeah.
So yes.
Thing.
It's one of the things that I picked up out of the live stream too, that they talked about simplicity.
Yes.
And they didn't claim to be smart. They just claimed to be sane, to stay in sensible things. I mean, and there were other controversial comments, and we will get to the individual stocks in a moment, but I noticed that they had a fairly strong view on cryptocurrencies.
Oh, yes. I'm not sure whether anyone would get offended if that. I'm just going to quote them. That's their view, okay?
Yes.
Because I think Munger used quite strong words in saying why he won't touch a crypto. It's because there are three reasons why he won't actually, touch Bitcoin. It's because of first, he will not touch anything that looks stupid, all right? And
I think we just lost about a quarter of our audience, Pauline.
Yes, that's the thing. When I say this, I must be very, very careful about saying this, because I know many of probably our audience over here. Okay, so I'm just going to say that's the words that he used. Okay, and I believe he has his reasons for saying that it's stupid. And the next thing is he won't touch things that's evil. He used the word, and it makes him look foolish. Right. And apparently Bitcoin to him meet that three criteria, and why evil is the sense that because right now there is no control, and that this thing of the paper, because I think the key thing that they are looking at is right now Bitcoin. If Buffett actually says this, if he buys a farm, he knows that the farm can actually turn into crops, and he can has fruits and other returns. And if he were to buy a real estate, he knows he can rent it out, right? And to give him money. But he's asking, if he were to buy a Bitcoin, what can he use it for? So this is where he's coming from. And what he mentioned about foolish for Munger is saying, if China government bans it, right, why is he still going into it? So this is where they are coming from. I know it is probably some of you may not agree with it, but I think it's food for thought that every one of us can see where it is going in terms of the cryptocurrency. I mean, that's the reason why I think it just falls back to what they always believe in is circle of competence. It's probably if you think that, no, I disagree with Munger and Buffett, it's because they do not know about the cryptocurrency. I can agree with you. Maybe you know much more about the cryptocurrency that they do not know. So I think it's still based on the principle of circle of competence. Yeah, but if it's within our circle of competence, I think why not, right? Yes.
They don't have to check every investment possible. They just have to find the ones that suit their approach to the market, which is, I guess, the same for all of us.
Yes. Yeah.
All right. Very good. All right. Well, thank you for those observations, Pauline. I'd like now to turn to the individual stocks. And just before we get your insights and that stock that was mentioned, I'd just like to show a very short video. This is a video of how Berkshire Hathaway's shareholdings have evolved over time. Now, in a very short space, less than a minute, we're going to look at a pictograph that shows their holdings in proportional terms since 1994. So we're not going to drill into the detail, but it does give you some sense of how their portfolio changes over time. It can sometimes feel like investors who want to own a business forever aren't pulling many reins, but that's not the case, as you'll see as I share this video with you. This one's in the public domain, but if you can see now this pictograph, you see there's Mr. Buffett right in the middle. Now you'll also see on this chart the cumulative returns in percentage terms come up as a bar chart in the bottom right-hand corner. And it's worth keeping an eye on that as well as the individual stock holdings, because that tells us just how successful they've been over the years. So let's start that up. And you can see that as we move through time, and the years are at the bottom there, you can see that their holdings do evolve quite substantially. And one of the common aspects throughout it, and you can see there was a lot of cash there in the early 2000s, but one of the common aspects is that it's often 3 or 4 large holdings in individual stocks that dominate the portfolio. And as you can also see, Coca-Cola has been there for a very long time. Now we're heading into the present time, and you can see that the leadership of the tech sector has also shown up in this portfolio. And as we last saw there, the Apple is now the largest stock in the Berkshire Hathaway portfolio. The reason for that is not necessarily that they bought more, although we do know that there was $5.1 billion expended by Berkshire Hathaway during the first quarter of the year as the markets were selling down. But that dominance of Apple in the portfolio reflects as much the huge increase in share price for Apple over the years, and that's one of the reasons why those relative value holdings change in the portfolio. But let's turn now, as we saw there, the 3 biggest stocks there: Apple, Bank of America, and Coca-Cola still. But that wasn't the stock that caught your eye today, Pauline. Is that right?
No, it's not. Before I talk about that particular stock that Warren Buffett actually mentioned of what he was actually aggressively buying since January, the key thing that he highlighted this. So before we talk about stocks, one key thing that Michael has highlighted was just now looking at the portfolio is cash position. Yes, one of the key things that Warren actually says that is he always have a good cash that's sitting inside for him to have the opportunity. Why is that so? Is because a lot of times people thought he timed the market very well. Yeah, and that was one of the questions that they were saying, wow, Mr. Buffett, you are so wonderful because you seem to be able to time the market and buy when it's really crashing and sell, you sometimes sell. And most of the time you sell the stock, you really time the market very well. But he actually mentioned he has never think about how to time the market, and they do not know how to time the markets as well. Yeah, and he wouldn't say like on a Saturday to Munger to say that, okay, Monday we're going to sell this particular stock away when the market opens. No, he doesn't do that. What he does is, if the market reacted in a certain way, it just tells him whether to buy or to sell, because that's a price that's given to us. And he says he's always ready. Opportunities are given to people who are ready. And he said this to us: be prepared. And that's how he's prepared. One of the stocks that he actually mentioned, I forgot it, what alligator. Yeah, he actually studied it for 60 years, 60. Yeah, and he is consistently studying those companies. Yeah, and he never stopped that. So the homework that's being done, he does it on a daily basis together with his investing managers. And that's the first thing that he mentioned about be prepared. So when the situation comes, he is ready. He knows it's cheap to buy. And in order to buy, he has the second thing that's ready, and that's cash. So a lot of times, I think it's not that retail investors like us, we can't invest or we do not know how to time the market. But I always hear, especially from the retail investors, because we college, we interact with so many people who are retail investors, especially like people who are our graduates and so on. They were saying, when there is a crash, it's not that I didn't want to buy. I know it's a good time, but I've no money, no capital during that time. But what happens during the time when it's bull run? People see that everybody is buying into stocks, and when it's high, everybody rush into it. Even when they do not have money, what do? They leverage to buy, right? So a lot of times people do not understand that it's just a very simple concept, like what Michael is saying, simplicity. Always do our homework, always know what we need to be buying, right? Day in, day out, just study those companies that is within our circle of competence and always have that cash ready. And this is why at this juncture during January, there is one stock that Berkshire was actually buying. It's called the Activision. Okay, and in January, Microsoft. Yeah, Activision.
Activision,
Yes.
right.
Yes. So in January, Microsoft actually announced that they are going to acquire, they are interested, they would like to acquire Activision at $95. Okay. And but what happens is the share price of Activision is around 70 plus 80 over dollars. So if this goes through at $95, so you can calculate, anyone, okay, for those who are in Tiger Brokers, I believe, you can go straight to find Activision, what is the last closing price. Okay, as per what I know, the last closing price is at around $75 or so. So imagine if the deal successfully closed, $95 minus $75, you make a $20, divide by $75, you make like a 26%, let's say in a few months or in a year. That's really a great return. But this is the part that Warren knows is an opportunity. So it doesn't mean, it's a good fundamentally sound company that he has been investing. All right. It's just that he knows Microsoft is now coming to acquire it. And he knows one thing, Microsoft has money. So this is a predictable thing that he knows. We know if you want to find out whether Microsoft has money or not, go to the balance sheet of Microsoft, you can see that they have the money to acquire Activision, right? So this is where it's of certain. The only thing that's uncertain is whether this deal would go through. Now, to him, if the deal goes through, good enough. He buys $70 over dollars, $80 over dollars, and is now sold off at $95. He made it a profit. But if it doesn't, he still buy into a fundamentally sound company that is now doing well, right? So this is where he's saying how he deploy his capital. I think that this is the part that he also showed us that as value investors, I always also share with our graduates in V College that we are looking at buying into stocks. Our initial primary objective is if it's a good company, we would like to hold it long term or even forever, just like Coca-Cola. But if somebody wants to acquire it, I think for good companies, we would foresee there might be some big conglomerates that's coming over to buy it over, and they would pay us a premium for it. But that's the context that in the first place, this company must be creating value. And that's the reason why someone is going to buy at a premium, because that value has been recognized by that individual, the institutions, or even the market.
Right.
Yeah. So
okay.
The principle, I think, is still there. Yes.
Yeah, no, I think the quote that came around that was that if they take it over, we'll make a profit. If they don't, we know exactly where we are. So they're obviously happy with the business, as you rightly point out. All right, well, that's an interesting stock, and I imagine one that a lot of our viewers will be researching into. I'd just like to put up on the screen here the, I don't know if you can see that, but let me just share that. This is the list of the top shareholdings for Berkshire Hathaway. And as you can see, Apple is absolutely dominating at the moment. It's almost half of the value of the portfolio. And at $157 billion, you can understand that. As we were talking about earlier, partly that's due to increasing the shareholding, but also it's largely due to the big increase in Apple's share price since Berkshire Hathaway bought in. But you can see that there are other major stocks here on this list. Bank of America, you've got American Express there, two finance companies, an interesting choice, particularly given the pressure we've seen on finance companies around the globe. Coca-Cola is still there. And I think that's more than 30 years that Berkshire Hathaway has been a shareholder in Coca-Cola. You can see Kraft there, another food company. Moody's Corporation is an interesting one. This is the ratings agency, one of the three major ratings agencies in the US. And it's an interesting judgment that Mr. Buffett and his investment team see value in it. Verizon Communications, one of the more old school communications companies, is popping up there. Another financial stock there in US Bank Corp. And you can see now, as a percent of the portfolio, we're getting down towards 1% with Occidental and Chevron, two old fossil fuel companies, at the bottom of this list. Of course, as Pauline mentioned earlier, I think there's currently around 80 stocks in their portfolio. Is that right, Pauline?
Yeah, some of it are private companies, so
right.
There are some, yes. So all in all, I think it's near to about 80 if we were to include those private companies that, like Candies or Brooks. They are not listed. Yeah,
right, of course, yes, of course.
Yes.
Yeah, and obviously we have much more information about their holding in publicly listed companies than we do in their in the private ones. But so and so you make a good point. These are only the publicly listed companies that we're looking at, and I think the total list there is quite substantial. But a lot of them are not a substantial part of the portfolio. These top 10 stocks here represent a very significant proportion of the portfolio. So it's a concentrated one. Pauline, I noticed that there was a lot of people checking out the products that the various investment companies were displaying. I noticed that Mr. Munger and Mr. Buffett both had a can of Coca-Cola and some peanut brittle in front of them as they answered questions. So they're clearly willing to partner with their investment targets over the long term, and they're obviously very willing to promote them. Was there anything in that hall, any product in that hall that caught your eye, Pauline, or that you might be tempted to buy one day?
For me, would be the T&Cs candies. Yeah. I like the peanut brittle. Yes. Right. Just like Warren Buffett and the I mean, we can't really find this elsewhere, right? So this is where when I come over here, I really like the peanut brittle. Yes, and the other one is their toffee. I'm not sure anyone have eaten there. So you can tell I've got sweet tooth. So I'm just like the both of them. Yeah, but I'm not a Coke fan. Yeah, I'm not a Coke fan, but I like chocolates and candies. Yes.
Very good.
Yeah. So that's me. And I got quite a few of these apparels, which I think they are really nice. Yes. Of course, the rest, like for example, the Nebraska Furniture Mart did very well last year. But of course, I won't be buying furniture over here and ship it back to Singapore. Doesn't make sense for me. Yeah, and I mean, and for the other companies, I think one of the key things that I probably would highlight would be Geico. Yeah, this company comes up quite a bit as a cause for concern. Talking about good companies, but the shareholders, as I mentioned, many of the shareholders are very, very savvy value investors, and they follow the companies, the stocks, and they really study them. And Geico is losing quite a bit of their moat due to another competitor that's coming up with some data analytics, which does very well in the automotive side of the insurance, which they are able to lower down in terms of the car insurance due to the stats that they have generated using machine learning and AI. So this is something that Geico is catching up on that. And that's something that also the shareholders were asking because their revenue has since been affected. So not all companies were doing very well in Berkshire. There are definitely companies that has cause for concern, and there are also companies that are changing that we realize as well. So and of course the next thing, the cause for concern would be it always would be the succession. And now that they have announced that Greg Abel plus Ajit will be taking over. Yeah, so the two of them were there, and they were exposed also to the various shareholders, and they were given the confidence for the shareholders to get to know that they are also as equipped and as capable as both Warren Buffett and Charlie Munger in terms of making sound investment decision, and they know the insurance and the companies as well. Yeah. So that's the part that I was also want to give a more balanced view to our audience, that not everything's rosy. in the investment that Berkshire is having, there are some companies that we do have to take note as well. Yeah.
Right. Okay. Well, it's a very good point to raise. Even the world's best investors don't get every single investment right, do they?
Yeah. Yeah. Right. And things change, right?
Well,
yeah, with
that's
times.
Right. Absolutely.
Yes.
Let's turn now, Pauline, to some of the questions that have been sent through during the course of the presentation. I hope you're ready for these. I'm sure there's you can handle the list.
Let's take a look.
So the first question that's come up is, what are big position changes Warren Buffett made that we should focus on? So,
that we should focus on the big position changes.
My guess is that this questioner is looking for clues for their own portfolio approach from what Mr. Buffett and his team have done. Were there any notable additions or subtractions?
Of course, we can always follow them. I think it's always open news. That's the first thing that Warren Buffett actually says. Every time in the news, they will say, Buffett sell this, Buffett buy that. And he gets so irritated. He says, you know what? A lot of times, all these decisions are not made by me. It was made by my investment managers. And I didn't even know what they were buying. Yeah, because I trust them so much, they don't need to go through me. But because the news want to have eyeballs, they say, Buffett buys this and Buffett sells this, right? Then he said, no, it should be Berkshire Hathaway buys this, Berkshire sells that. Yeah, so this is the first thing he highlighted. And the second thing is, I was just thinking, why make your life so hard to keep track of what he buys and what he sells? Why don't you just buy into Berkshire? Isn't it much easier?
Right, simple answer.
Yes, I think you can follow, but because it is a very difficult thing to follow. Why do I say so? Because let's say today he's gonna sell Coca-Cola. Are you going to start buying and selling Coca-Cola? It doesn't make sense because he bought Coca-Cola like 40 years ago. How are you going to buy back that kind of share price? Okay. And the next thing is this. I think many of the followers are looking at Munger's every step. Oh, at one time, he bought a lot of Baba stocks. On the other time, the next month, he sold some of the Baba stocks. So what is he thinking? Is he buying or is he selling? All right. So you have to do a deeper analysis. And if you have done your deeper analysis, then you realize there is something that he's doing. And it could be because of tax situation. Yeah. And because they buy into such a big position, there are certain things when they are doing, it could be due to tax purpose. It may not be because of the fundamental. So if you are going to do the same thing, but you are not buying into, you see, when Munger buys into Alibaba, he bought in hundreds of thousands of shares. Yeah, it's not in terms of the 100 shares, it's hundreds of thousands of shares. And retail investors don't buy even 100 shares. No. Probably retail investors are just buying 10 shares, 20 shares. But maybe he's selling not because of the company is not doing well. It could be because of tax purposes. It could be because of portfolio management. Right. Yeah. So these are the things. Point. Yes. So a lot of times, we are thinking that they might have certain big positions. So if you are asking what is the big position, I think Buffett has already said this quarter, what is their big position, just like I've mentioned. He has openly said it, so I'm just translating it. Yeah. Okay. So this is that question. If you want a simple answer, you just want to follow, I'm not sure. Okay, but that's what he said, and you can watch it in the open web live. So he mentioned that particular stock. So it's not a recommendation to buy or sell.
Not at all.
I'm just saying that he said that. All right. Yeah.
Understood. And thank you for making that clear. That's terrific.
Yes.
Turning to the other questions that are coming through. Well, here's one. How did Berkshire manage to outperform the broader market by a wide margin this year?
Sorry, how did Buffett?
How did Berkshire manage to outperform the broader share market? This year?
Of course, it's from my perspective. When we talk about outperform, it is probably not because Berkshire outperformed. I think Berkshire all the while, if you take a look at their chart, it is very, I would say, steady in terms of the growth. There isn't any big jump up and down, apart from March 2020. Yeah,
Right.
March 2020, there was a significant drop, and that was a really good time. Yeah, when it's very rarely that even Buffett himself bought so much of his stocks back. Yeah, I
Yes.
think he invested about 40 billion, if I remember correctly. 40 billion
Wow.
to do a share buyback. Yeah. So, and when asked this question, why did he actually invest or spend so much money in doing a share buyback? He said, you know, my stocks are cheap. It is undervalued. And I know my business the best. If I were to put my money into the best position, where do I put it? It's in my own business. And it makes total sense.
It does,
right?
doesn't it?
Yes. So this is where he knows it best, and he doesn't really time, and he just do whatever that he consistently doing, and the markets will take care of it by itself. And you know what? Value investors who invest, as I mentioned, just not if you have, I've given the profile of the investors. Generally, those who actually invest in a Berkshire are not those traders who buy in and out. If you want to become a trader, it is very difficult for you to trade Berkshire stocks, and it doesn't make sense. So it's kind of like the speculators may not come in, because I've seen so many of the shareholders, we are all value investors, and we are all happy. Many of us like bought at, they will say like $50, $100, and we're happy now it's like $300 over dollars, you know, sitting happily at the profit. Do we want to sell? No, we are thinking of passing it over to our children, grandchildren, and things like that. So
right.
you don't see speculators over here, all right? That there aren't much of a speculation. So how about the market out there? There are a lot of speculators. So when there's a drop, what is it? It creates fear. When it creates fear, people would just sell it. So that's where it's very volatile. And during such a volatile situation, that's where when people want to seek comfort, when there's fear in the market, what would they do? They will come and look for the steady stocks. And that's naturally how it would play out. Yeah.
That's right. And it goes back to that saying from Warren Buffett's mentor, Benjamin Graham, who is a legendary value investor, to be greedy when others are fearful and fearful when others are greedy. And that sums it up, doesn't it?
Yeah. So that's why he said he never timed the market. He just prepare his cash. When people are fearful, I'll just go and buy it. And of course, he will always ask this question, I believe, you know, because that's what I would also think, well, people want to sell so cheap. Yeah. And since someone wants to sell so cheap, why don't I just buy it when I have the cash? It makes sense. So you see, when people are rational, you have sanity, you will do the right thing.
Yes. Yeah, very good. All right, I think we've got time for just one more question. Let's try and no, that one's a bit complicated.
Complicated.
Well, there's one here, and I'm not sure that there is an answer out of today's meeting, but what is Warren Buffett's future investment plan?
If I were to understand him correctly, he never said there wasn't any question about his future plans of investing, but what he always advocate would be his philosophy of investing never change, and he doesn't need to change. Now, there was a really big thing going on that they were asking, why is Warren Buffett being the CEO as well as the chairman? And why is he taking up the two positions? By right, he should not be, because there's like a conflict of interest. And Munger is saying, if he can do the job so well, why do you want to change? Right. And of course, I'm from Singapore, and Munger is also saying this. One of the best things that Singapore government and Singapore is doing so well as a country is because the party never change. Yeah. Right. Yes. And that creates that stability. Yeah. Yes, and that's where certainly the system works. And if the system works, why are you changing it? So this is where I think when it comes to the future investment plan, I believe looking at the past 50 years of how Warren Buffett and Charlie Munger has been investing, the philosophy, I believe, will still stay the same. They are not people who would say that, wow, Bitcoin should be going up. I should have bought it at 50 cents. Now it's like $50,000. I think he has no regrets for it. Yeah. Yes, he just do whatever that he's good at, that he continue to do. And I believe he would still continue to do for the next many years to come. Yeah.
He'll keep doing what he's always done so well.
Yeah, because it works.
It does. It does.
Yeah.
Well, I think that's a good note for us to end on, Pauline. I would like to extend my thanks and the thanks of the whole Tiger team, as well as everyone watching. I know it's been a very long day for you. You've been up since very early this morning, and it's now very late at night in Omaha. So on behalf of the audience and all of the team at Tiger, I'd like to thank you very much for your insights and your generosity in sharing them with us today.
Thank you, Michael. So, Michael, I believe there are still some questions that the participants would like, or the audience would like me to answer and reply. So, if you like to, right, you can follow us under V College. Can follow the group under V College. What I would be doing, because I'm still consolidating all my thoughts, my learnings. So what we would be doing is I'll be posting up more pictures, videos, and also, you know, I have gotten some of the gifts as well. Okay, you can see it. I like the t-shirts and so on, which we would be like giving away. So once you read it, I may just post it up and see how you could, you know, just put inside the comments, and we could just run a contest and for you to really walk away with some of all the souvenirs that I've gotten in the AGM. All right, so I will be posting up. Just follow us, okay? I can't tell you when I will be giving out, all right? No promise, because I need to come up with a system how we could do that. But I believe if you want to follow me and you found to follow us in terms of more about what I will be sharing, and I hope to also, maybe you want to put down your comments and ask me the questions. I will be there to answer your questions, okay, and share more with you. I would like to share more with you. It's just at the time constraints. So let's do, and you can follow me at V College, and I will share more articles with you. Okay.
All right. Thank you very much, Pauline. Also, for those who still, and I'm sorry, we didn't get to all the questions today, but for those who still have questions or would like to discuss it further, of course, you can head to the Tiger Trade app, where the conversation amongst investors and traders is ongoing, and where, of course, the Berkshire Hathaway AGM is a hot topic at the moment. So if you'd like to keep the conversation going, or if you'd like to put some questions to your peers, head to the Tiger Trade app and join the conversation there. All right, well, thanks again, Pauline, and thanks to all those who've attended today's event, and we'll look forward to speaking with you again soon at Tiger.
Thank you, Michael. Thank you, Tiger Brokers.
Thank you.
Have a great holiday.
Thank you.
Thank you.